Right, well, let's move on to Novartis, because this one, of course, is also European, headquartered in Switzerland. It's one of the world's largest pharmaceutical companies. It has a portfolio focused on cancer drugs, and we'll see in a minute how that worked out. But it's also got some consumer pharma products and healthcare products, generics in the form of its Sandoz division, and then also Alcon, which is a company that manufactures lenses, contact lenses and the likes. It also has a 33% stake, silent, unmanaged stake in Roche, which is another huge Swiss pharma company. $209.6 billion worth of market cap. That's if you take the NVS ADR traded in New York, but again, it would have a market value of equivalent value in Swiss francs on its principal listing. And that comes to 30.4 price to earnings ratio and a dividend yield of 3.4%. Another one of these healthcare titans.
Yes, absolutely. Very, very strong in pharmaceuticals. And I think what you've got to understand about that industry is kind of the boom-bust nature of it. They put massive amounts of money into research and development, finding these cures and vaccines and treatments for all these various diseases, and then it takes approval from the various regulatory authorities. If they get that, you see a massive surge in earnings. They literally go to market 24 hours after the approval there, and that's hugely earnings accretive in that regard. So their pipeline of pharmaceuticals becomes very important to watch, and that comes with risk. Because
there'll be stuff that's already moving towards the end of its patent period, like Gleevec, which is a big cancer drug of theirs, but then there'll be other stuff, like they've got a new drug, an oral drug for asthma, which is quite attractive, called Fevipiprant, and all sorts of other things. And then some really top sellers like Ritalin. You know, the kids aren't going to not stop needing that anytime soon.
Yeah, correct. So, I mean, you know, they've got medicine for migraines, lung cancer, multiple sclerosis. So, you know, those approvals are really key for them.
Not to mention that they own diclofenac, which is Cataflam and Voltaren. For a comrades journal like you, let me tell you, that stuff is, this is core to a lot of people's...
So you see, I like them already. So, you know, that's what you've got to understand about these type of businesses. The generics business is great because as those patents expire, they are still able to participate in them. A lot of joint ventures happening there as well. And look, make no mistake, pharmaceuticals is a high margin business. The eye care device is not doing so well at the moment.
Alcon, I don't know, for some reason not doing all that well. And may, in fact, at some point, they indicate to be something that they might look to.
So they're investing into that at the moment to try and revive it a bit. So that's been a bit of drag on profitability.
Yeah. So there has been some portfolio improvement. And you can see the overlaps here. They had actually bought Alcon from Nestle in 2010. Now they want to sell it. They sold Gerber, which is a baby food business, to Nestle at some point. So they're trying to kind of redo the portfolio. And then something significant also is that they are focused on high growth cancer drugs in the portfolio. And part of that was that they swapped their vaccines business with GlaxoSmithKline, which we're going to talk about in a minute. So that refocused Novartis more on cancer, which is obviously a very attractive area. Okay, good. So, I don't know, hot or not, this is the point we got to reach at some point in these conversations.
Yes, look, similar valuation to Nestle, around a 30 times earnings. I like the product. I like where they're going, and unfortunately, their products do have a direct need by consumers, and that is on the increase.
As you say, unfortunately, when I said cancer is a great area to be involved in, I'm not talking about the patients, I'm talking about the companies that sell this
Unfortunately, it is big business. And as a result, they do generate significant
earnings. Because, of course, people are living longer. They're not dying when they're young of heart disease and all sorts of other environmental factors, but that means in their 70s and 80s, cancer is becoming a much more ever-present worry. Okay, so we're going to go hot on
Hot for me?
Yes, good.